Hello, my name is Jason Mercer. I'm the Toronto Real Estate Board's Senior Manager of Market Analysis. Over the next few minutes, I'm going to take a look at how the commercial market fared in the first quarter of this year relative to sale and lease transactions through the Toronto MLS system. So during the first quarter of 2013, Toronto Real Estate Board Commercial Division members reported about 4.5 million square feet of leased space through the Toronto MLS system. And this represented a decline of about 4.5% in comparison to the first quarter of 2012. Now, it's also important to note that industrial properties accounted for about 78% of this total amount of space transacted, coming at about 3.5 million square feet. So while lease transactions were down on a year-over-year basis in the first quarter, it is important to note that average lease rates are up for the major segments of the commercial market. Take industrial, for example. You saw the average lease rate on a per square foot net basis up by 4.5% to $5.15. And I think that that's promising, given that we saw a dip in the average lease rate in the fourth quarter. We've seen that rebound come through the first 3 months of 2013. And I think it also points to a heightened demand for commercial space as some business concerns in southwestern Ontario are looking towards better growth prospects in 2013 and beyond, especially as we look to a rebound in the export market this year and next. Now I'd like to turn to sales, and if we look at the total combined sales through the Toronto MLS system in the first quarter, that amounted to 274 industrial, commercial retail, and office transactions. And this was down from 334 combined sales in the first quarter of 2012. From a pricing perspective, we saw the average price per square foot down to $61 versus $67 last year for industrial properties, whereas if we look at commercial retail and office, we saw the average price per square foot up on a year-over-year basis. Now, it is important to note that we do see some volatility in average selling prices on a period-to-period basis. But I think if we look at investment metrics like cap rates or selling prices for non-MLS properties, I think there's reason to believe that pricing will remain buoyant for most segments of the commercial market as we move through 2013. And this is especially the case given that the consensus view is for an acceleration in overall economic growth in Canada, both this year and moving into 2014. So that's a brief overview of the commercial market for the first quarter of this year as it relates to Toronto MLS transactions. Be sure to check out the Commercial Realty Watch for the first quarter at TREBcommercial.com. Thanks very much, and I look forward to speaking with you again at the end of the second quarter.